Welcome to A Word in Private, KPMG's vodcast on all things private equity. I'm Naveen Sharma, UK Head of PE, and your host for this series. I will be speaking to a range of different guests on the hottest topics in private equity. Today's topic is cyber, and in particular discussing how cyber risk can potentially be managed more strategically at the portfolio level to protect value and provide more control to PE houses. I have two guests joining me today. Firstly, Bryan Littlefair, who is an operational advisor on cybersecurity to Advent International across its European portfolio. Prior to this, Bryan has spent over 25 years in the industry, including leading roles as Chief Security Officer at FTSE 100 organizations such as Aviva and Vodafone. And my second guest is Martin Tyley. Martin has been a partner at KPMG for over 10 years, and he leads our cyber work in private equity in the UK, and he's the global lead for KPMG's Cyber Risk Quantification Tool, a proprietary SaaS platform developed here in the UK that helps businesses better quantify cyber risks. So Bryan and Martin, a very warm welcome. So Bryan, I wanted to come to you first actually, and this is something that I've been reflecting over the last few days actually, is how important do you think cyber currently is at the PE fund level and also at board levels at PE portcos? And have you seen a material change in attitudes over the last few years?
I've been working with private equity, so before Advent it was Bain Capital, so for a number of years. And I've seen that importance and relevance of cyber shift at the fund level, but also at the portfolio level. And I think what we're seeing is the portfolio houses actually taking control of cybersecurity and seeing this as a strategic initiative, similar to ESG, that they want to drive into their portfolio for several reasons. Obviously, they see it as a risk. When it comes to divestment, it's something that could potentially damage the sale price. But actually, most of them actually just want to do the right thing for their customer base. They recognize that they've invested into organizations. They recognize that those organizations carry sensitive information. Some of them are payment businesses. Some of them are health businesses. So it's actually the right thing to do from an organizational perspective. And they're getting quite directional in terms of the guidance that they're giving out to the actual portfolio, stipulating that they have to achieve certain maturity levels, stipulating that they have to, be strategic and invest into cybersecurity as an ongoing discipline. So it's not something it used to be 10, 15 years ago where it was a periodic assessment that might happen every couple of years. This is an ongoing discussion and debate and, a requirement coming from PE into the portfolio companies now of we have to be mindful of cybersecurity and we have to drive that maturity up on an ongoing basis.
Okay, very interesting, Bryan. But that in mind, Martin, I'll come to you. How do you think PE funds and portcos are they adequately prepared?
So I think it definitely varies. Bryan just described sort of a bit of a journey that the industry as a whole has been on. I mean, in our team, we've worked with, I'd say, around 60 portcos in the last 18 months. And, the bad news, first of all, probably in only around 10% of those did we see an organisation that was able to protect itself at the outset from relatively basic attacks. Moving forward to where we are today, we understand why, I think, really well. And that's mainly because the way it's been articulated as a risk area hasn't been in business language, it hasn't been in financial terms, it hasn't been in a way that senior leaders have been able to grasp that and then help those teams to move things forward. So typically we see underinvestment. Now, conversely, what we have seen in the last 12 months is this huge shift, right? So we've seen once you articulate cyber in financial terms with the most likely outcome, and when you articulate with this budget, this is how I can improve us, we've seen an incredible movement of pace across portfolios and across portcos at an individual level as well. So it's been a really, really interesting 12 months.
So Bryan, maybe over to you here. What do you think PE funds should be doing better with their portcos? Is this a capability issue that they need to be addressing in-house, or are there other things they need to be doing to get ahead of the curve?
I think it's not. I don't feel it's a capability issue because I think it's something that they've strategically started to focus on. Most of the private equity houses that I know of, and there are cybersecurity groups across private equity that the advisors get together. And so I know all of the big funds have very capable operations advisors in cybersecurity that are there to guide and steer the portfolio company. Seems to be the model across private equity. Some, have brought very capable people in-house. Others rely on operations advisors. Regardless, I think it's to tap into that talent and experience pool in the advisors and actually lend that experience to the portfolio companies to allow them to grow their internal capability, hire talent locally so that we can actually strategically drive that security maturity up. And that's the objective. As I say, it's quite directional. We want our portfolio companies to be in, the upper quartile from a cybersecurity perspective as benchmarked to peer in their sector. And that's pretty normal across private equity.
And but linked to that, probably, Martin, coming back to is, there's no one size fits all in terms of looking at different organizations, different sectors actually. So, and how do you prioritize investment? So how do you treat and review risk across a breadth of different enterprises and within a portfolio? And then linked to that, I could ask is, in the language of private equity, how do you communicate the need for investment in a language they understand? And that would be probably useful to articulate actually. And maybe linked in there, if you could actually also mention or bring in what we are doing within KPMG in terms of our KPMG cyber risk quantification tool. Sorry, long
things there. Let me try and do the. So does one
in.
size fit all? That was the first part, right? And well, no, it doesn't. Obviously. So seeing what Bryan and seeing what Advent have done, one of the things working there is broadly looking at the organisations in terms of their complexity, in terms of their size, in terms of things like their inherent risk. So Bryan mentioned, organisations in the payments sector, for example, where you could have something in the defence sector where the regulatory bar is just much higher. So taking all of these factors and a few others, sort of putting them into different kind of buckets in terms of their complexity and the approach that you're going to take. That's the first thing I'd say. And then wrapping in there, how do we work with them around cyber risk insights? We flip it to take a threat-based approach rather than a controls-based approach. I explain what I mean by that. If I'm a life sciences organisation, for example, what I'm really concerned about is potentially the millions of customer trial records and personal data that I hold, or maybe the intellectual property around a new product. And loss of those things is the most critical thing that could happen to me as an organisation. Conversely, take a food manufacturer. Food manufacturer running 24/7 production. What they're concerned around is an attack that could prevent that food operation from happening, something that shuts that down, like a ransomware attack that we hear about. Now, data loss and ransomware, in terms of the controls that prevent those things, there is a commonality, there's an overlap, but there's also a difference. And therefore, taking that threat-led approach helps to prioritize, what am I really concerned about? Where do I need to focus? And that for us is critical, rather than here are 220 controls in this standard, everyone must apply them. You then said, how do we articulate that in business language? Well, looking at those threat events, let's take that food manufacturer. So hypothetically, we could understand that today, based on where they are, if an event were to occur, it's going to cost them between, let's say, 10 and 20 million pounds, with 16 million as the most likely sort of outcome. With a 1 million investment in cybersecurity of improving maybe technology or education or different things, then their ability to respond is much improved. And so that organisation might move to, say, 5 to 10 million being the range and 6 million being the most likely outcome. So you've got, with 1 million investment, a 9 million reduction, and that's a cost benefit. So we can articulate cyber in terms of cost benefit to senior leaders, so that when the questions are, do I invest in sales? Do I reduce my cost in the back office? Do I invest in these cybersecurity controls? You can measure that, and you can do that in a consistent way. And that has been really important and has helped senior leaders make really, really quick decisions.
And just linked to that, I think you mentioned earlier about proprietary tool helping the quantification. Could you just maybe add a bit of color on?
Yeah, absolutely. So cyber risk quantification has been a real game changer for us. I probably spent 20 years measuring controls and telling clients how many gaps they had. And what quantification has done is it's helped us to understand, like I kind of suggested there, not all controls are equal. And therefore, not only can we present that range of likely losses and where they are, but we capture all of that control information into the platform so that when a chief security officer, for example, is asking for a budget of that £1 million, they can go in there each quarter and update the progress that they've made. So they can report to senior management and show whether they are reducing those kind of potential losses over time. And so you have all of that information in one place, and that prevents this idea of let's get someone in every 2 years, to come in and have a look and see where we are.
So despite best endeavors you have, potentially cyber attackers or perpetrators appear to be honest, a few steps ahead. Can you genuinely foolproof your business from a cyber attack, Bryan? Or is that something you can never achieve? And a link to that is, maybe Martin will later on, what steps can you take? What immediate steps can you take if you were to, if you're subject to a cyber attack?
I'll let Bryan answer the foolproof one.
Yeah. Well, I don't think you can foolproof a business, no. And I think that's where some of the maturity of the discussions at the exec team and board have changed. Yeah. 10 years ago, a board would say they have a zero tolerance for any cyber incident, just make sure it doesn't happen. I think now, with a little bit more of realism and understanding what's going on, you have some very, big, capable organizations that have invested strategically in security for numbers of years, have been attacked and breached or had security issues. So it's something that's always going to happen. I think security by default is a reactive science. Someone comes up with a compromise, we come up with a solution. So it's a bit of a cat and mouse game. I'd love to be able to turn that around, and I think with AI, we're certainly going to hopefully get there with some of the advancements that are coming. I think, from a board, from an executive perspective, it's getting them to recognize that things are always going to happen, things are going to occur. It's, you should measure your security team on their ability to detect them when they're happening and their ability to restore your business back to normal operation as quickly as possible, but accept that security incidents are always going to occur. Right?
Very good segue into this, sir. What should one do if something happens?
Yeah. So I'm going to break this down into kind of five steps kind of quickly, because it's really varied, right? What can happen and how organizations are hit, but there's some commonalities there. The first one is you need to have a cyber response, a first response capability. Now that might be in-house, that might be an organization that you call on, but having access to experts that have gone through this before and are available 24/7 is really important, because you don't want to wait when something happens. The second thing is, can we describe it as sort of threat intelligence? So how quickly can we understand what's happened? Where did this come from? So can we understand who the attacker is? And what was their modus operandi? So different threat actors, whether it be organized crime or coming from other groups, there's a consistency in the way that they will try and attack and deploy something into an organization. So what's the MO? What do we need to understand? And then practically at that stage, probably putting some monitoring out there on the dark web to understand, just, is my organization's name being mentioned? Are there user credentials of people in my organization that are starting to be traded? So there are some practical steps that you can take really, really quickly as well. Third thing is thinking about legal and regulators. Firstly, do we want to bring in general counsel and have this being managed under legal privilege? There might be really good reasons why you want to do that. And then from a regulatory perspective, is this a breach where I need to inform the regulator? Because very often there's a time window on that. Once you've established something's happened, there's an expectation that you will inform them very, very quickly. Fourth area is communications. And so that's internally. So that's to your staff and your teams and your people who are going to want to know what's happening, because it'll be very apparent. And then externally to stakeholders. I mentioned regulators already, but that might be shareholders, or it could be your suppliers as well that you need to be talking to. And what can you tell them, and what are you going to be able to say? And then the last thing is recovery. Now, one of the first questions that's going to be asked is, when can we get back up and running? But until you've understood what happened, where did it come from, how have we been impacted, who do we need to inform, you can't jump there. You can't jump to recovery straight away. And in fact, we've seen some instances where organizations have recovered really quickly and they've destroyed sort of forensic evidence that the regulator would then subsequently expect to have been able to see. So you have to be really careful in thinking about how quickly can we come back and can we recover at a pace that's realistic for the organization and that allows you to keep things. And finish on a bit of good news as well, which is that from the 100 plus incidents that we respond to sort of every year, those that have been through some form of rehearsal, that have understood these steps, that know who's going to take which responsibilities, and brilliant if they've been through it as well, they recover around 3 times faster than those that haven't answered those questions. So there's a really strong reason for doing that.
Good to hear that. Actually, so planning does help here. The area that people sometimes do talk about is cyber insurance. Everyone said we're covered because we've got cyber insurance. So Bryan, maybe good to get your thoughts as to how much protection does cyber insurance give you?
Cyber insurance isn't for everyone, right? So, but it equally adds a lot of value to some organizations. So every company has to look at, who they are, what they operate, and whether cyber insurance fits for them. And equally, we have organizations that just aren't mature enough from a cybersecurity perspective to get cyber insurance yet. The industry has got very prescriptive around the level of capability, the level of maturity that they expect to see in an organization before they would give you that cyber insurance. I think that, the majority of private equity organizations would want to see their portfolio companies achieving a level of maturity and actually having cyber insurance in play as part of that ownership life cycle. And absolutely, certainly the ones that I work with, everyone is on that trajectory or already has cyber insurance baked in. I think you have to understand your individual policy and what it actually gives you. As Martin said, one of the key things you want in place is an instant response capability. And cyber insurance would typically give you that for a defined period of time, typically, 72 hours, but what's your plan after that? It will also help you with, some of the restoration capabilities, but it may not cover, some of the damages that you incur as part of the cyber insurance. So your ransomware payment, should you have to pay it, that may or may not be included. Obviously, you've been down as a business, you've had significant business disruption. That loss may not be covered as well. But one of the main things that obviously it doesn't cover is your reputation. And I think that's where, cyber insurance does some things, but as Martin said, having that threat-led, proactive approach, making sure that you can restore as quickly as possible, not obviously damaging forensic evidence, but what I see in terms of breaches that, if you could say, go well versus then go badly is communication. So being very transparent with your customer base, being very transparent with your regulators, saying this is what's happened, this is what we're going to do about it, and this is what we think we can do to get the business back as quickly as possible. So yes, cyber insurance will give you some of those components, but you have to think through the broader wrapper to make sure you've got everything in place.
I think we're almost out of time, so I wanted to get a few, probably from each one of you, your top tip to either a board member, is it a Chief Information Security Officer, crew, or CFO, and Martin, to the operating partner at GP. What's sort of your best top tip or best advice you can give them?
The Chief Security Officer often isn't a boardroom position, right? So sometimes this is somebody not necessarily buried within the organization, but sort of reporting through to that level. My top tip would be to make sure that you've kind of engaged with them and understood from them where they see the threats to the organization. Most organizations that we see, there is somebody there who's thinking about this and spending a lot of time, talking about this, but they just might not be giving it in the language and in the way that can easily be understood. So, there could be some great talent within that organization. Go and engage, through the leadership team and hear and understand from them, not how well controlled are we or how many viruses did we stop last month, but what are the threats? What are we most concerned about? Yeah, if you could change one thing, what would it be? And just engaging with them will probably give you more insight into yet another report.
Yeah, I definitely want to back that one up, right? But, my biggest guidance is, cyber is a business risk, not a technology risk. We often see the Chief Security Officer or Chief Information Security Officer reporting into a technology reporting line. I think that's starting to change. But when cyber doesn't go as planned, let's put it like that way, it obviously causes a massive disruption to the business. So it needs to be viewed as that strategic business risk. And as, kind of building on what Martin said a few questions ago, is don't take a compliance view of your cybersecurity. Just because you comply to your policy 100% doesn't mean that you're 100% secure. So be proactive, test yourself before others test you, and make sure that you've got the routines in place to effectively recover.
Bryan, Martin, thank you for your top tips there. probably I would like to end the session with some key 3 top takeaways. I always like to end each of the sessions like that. First takeaway is that majority of PE portcos are still unprepared. That is very surprising given all the chat that's been going on in cyber over a number of years. But what this really means is PE funds really has to take full ownership of this issue, and that might even mean making sure there's right capability across the entire portco to help portfolio companies assess the risk better. So I hope you don't disagree with that.
I'll agree with that. Yeah.
The second, which I think, Martin, you raised, which is quite an important one, is while PE funds undertake a cyber review across a portfolio, it needs to focus on a threat-based approach and not look at the 100 and 200 different controls you have to go and tick and say whether that's right. And again, it needs to be tailor-made to a different sector and a different, whether it's regulatory, whether it's defense type business. Now, this threat-based approach helps you identify material areas of risk and that you translate that into financial terms. So fundamentally, you can go to a board and say, if you were to invest in this, you would reduce the risk of financial loss will be reduced by Y or X accordingly. Yeah. So I think that's an important key takeaway. And the final one, I think both you mentioned that it's not if but when a cyber event would happen to a portfolio company or a PE fund. And the key here is to make sure you're prepared for that and you rehearse extensively. And the more prepared you are, the faster you recover. And I think that the term uses 3 times faster if you are well prepared and well rehearsed. So there's an old adage that goes, failure to plan is planning to fail. So I think the key lesson there is ensure that you have robust plans to cope with any event. And more importantly, you also then rehearse how to come back and recover quickly. Bryan, Martin, thank you so much for your time today. It's been really insightful and getting your views on such an important topic. It's clear that cybersecurity represents one of the biggest risks for PE houses, but can certainly be looked at differently than many currently are and managed better. Till the next time, this is Naveen Sharma from A Word in Private.